time, let's hit some committee moves. Bill, you bought more shares of BNA. I know we sort of teased the financials earlier, but tell us why you did this with Bank of America.
I've been planning to add more to Bank of America for really weeks, and you kind of waiting once we got through this earnings report. But the problem was that with the Fed expectations, they were looking for rate cuts too soon, and now the 10-year yield has risen back up to 4.3. I think it's appropriate to start looking at it because when the 10-year yield rises, Bank of America has traded poorly. But one thing I like to see this week was the yield rise, and the Bank of America actually traded really well. So that was my catalyst to really kind of push into that. I think net interest income is going to be something that continues to improve. Maybe the way it traded here is because of the New York Community Bank and all the negativity about some of the regionals that's now been flushed out, and now the Bank of America doesn't have those sort of handcuffs on it, which I like that quite a bit, and that was my catalyst in really pulling the trigger now.
Wait a second. You're a futures trader, so you follow momentum. Why not Citi? Why not JP Morgan? Why not Wells? That's where the momentum is the last week.
I agree with you, and JP Morgan's setting highs. And we do own JP Morgan, I think, and I've talked about when we added JP Morgan at the fourth quarter, was, I want to have that exposure in case Bank of America doesn't come out of the hole. But I think Bank of America can outperform a bit here and play a catch-up trade. And that's sort of what I'm looking at from that angle.
Okay. You also bought more Tesla.
Yes. Yeah.
Why now? Why here?
We talked about it, I think it was last week on the show before I got into the trade. I think it bottomed out. It held a technical level of support. And like Joe just said, I'm a futures trader. And when things don't continue to go lower and they respond to technical support, that was my signal to get in. And the market has started to turn. I think the negativity, I highlighted that last week, the negativity here has really peaked around Tesla. And it's really started to break out of a little bit of a consolidation pattern through yesterday's trade. I think they'll figure this. You see SpaceX being moved to Texas from Delaware. I wonder what they'll do with Tesla. I think that that would probably move. You start to work through some of this compensation package from Elon. I still wouldn't be surprised to see Elon himself buy stock and increase his position. But once they kind of work through some of this that's been going as a headwind, I think Tesla can start to trade a bit higher.
You're shaking your head. You don't think the negativity didn't work down?
No, I'm shaking my head because on the first business day of February, I came onto the network and I said we added Tesla to the ETF. Discretionary Joe would not have added Tesla to the ETF. We added it at, I think, 186. Non-discretionary Joe added it, and non-discretionary Joe seems to be right now. So you follow the rules, you don't follow your intuition, because I thought Tesla was going to break down below 175.
Discretionary Joe, I like that. I'm cautious, Courtney. Not with trading, just life in general. Okay, finally, Bill, you trimmed Cheniere?
Yeah, Cheniere's been a holding that we throttle in and out of quite a bit, and it's been in the top 10 before, which says a lot about my love for this name and this stock. But here's the problem. First, the good thing is they don't get paid on the price of natural gas. They get paid on shipping volume, and they got a foothold in that space right now because these export bans that are building out for years to come, I think that will get resolved. But the fact that they're not resolved, it became the last shoe to drop for natural gas. And I do fear here, from a momentum standpoint, when you see a market, especially a commodities market, sell off in the manner that natural gas has sold off recently, you usually don't get a bottom until you get a big capitulation. So I don't want to be in a larger position than I should have in Cheniere, and then the baby gets thrown out with the bathwater if something like that were to happen.
So you're not questioning kind of the longer-term tailwinds for natural gas, for LNG here? Because, I mean, I think we all can admit, even though we're down from September 22 highs, that there's a lot of opportunity in terms of the switch from coal to natural gas, and that, they will benefit from export volumes of that.
Yeah, absolutely. The supply right now is well above like the 5-year average. It's well above. So right now there's oversupplied market, and the producers are continuing to produce right now. I mean, they need the industry needs to have a capitulation of where they have to shut down the production here for some reason. And the lower prices could be what maybe the spot prices at 50 cents. You look at some of the future prices going out to March, April, May are above $1. If those future prices, those forward contracts start getting below $1 at some point, that's going to be maybe signal some capitulation here.
And Joe, you own Valero, but then more energy names in the Joe T.
Yeah, but we've been reducing the weighting towards energy. In fact, we reduced it significantly. One could argue that our exposure to energy was a little bit extreme. It was up around 12%. We're down to right now 6% energy holding. So we're still technically slightly overweight energy, but energy has not performed over the last 12 months, and we've responded accordingly there.
Shannon, what about energy more broadly? Where do you sit right now?
So I think, similar to my comments about LNG, I mean, I think longer term, we really do think that there's going to be a supply-demand mismatch that supports that. However, I think if you look at how energy prices have traded, they really have been range-bound, and that doesn't necessarily correlate directly to stock price performance in the energy sector. But until you start to get a sense of either increased demand from China or perhaps some upward pressure on energy prices from geopolitical concerns, I think that there's going to be generally, this is sort of the end of the line in terms of that broadening out. There just isn't a lot of enthusiasm for the sector in sort of the general public right now.
Let's just point out one thing as we talk about all this oil, spot oil, $79, approaching back towards 80. So we're going back to some levels we haven't seen since early fall.
Yeah, and as a sector, energy actually third best performer here today, up about 0.6%.